traders, Gary Wagner here. It is approximately 10:45 in Honolulu, Tuesday the 27th day of December, and this is the daily report for gold and silver. In extremely quiet trading, we do have gold under pressure this morning, trading off $10 to $14 lower, currently trading at $15.93.25. We're looking at a daily Henkin chart. And the reason for pulling up this chart first is I want to take a look at different levels that we currently have that should offer us some support. And the primary level that I want to look at, let me move the text over to the right, is whether or not this 1580 holds. 1580 is a 76% retracement when we look at what the market has done from the July rally, which was at around 14 plus 1475, all the way up to 1950, this tremendous rally that we witnessed. Now, we are looking right now at a market that I believe should have a 5 count to conclude, and the 5 count is from B to C to conclude our major 4, in which we'll see 1, 2, 3, 4, and then 5. Now, where will 5 take us? Obviously, if we have a flat, it's going to take us back to this 1534 area. That is one distinct possibility. If, in fact, we have a truncated, it could end anywhere. And, of course, a standard zigzag is going to take us below these particular lows. Now, what kind of time cycle am I looking at? Well, if we see the market play out in the way that it has traded over the last couple of years, there is a distinct possibility that that should be somewhere in January or February of this year. Of next year. Traders, we are looking at a very short term. It's 113 standard candlestick chart. And you can see we really have to take out the data here. This is when the markets were closed. This, of course, I trust everyone had a good holiday season. But this 1580, 1583, to me is a fairly critical point if it's going to hold at all. And my rationale for that is that when we take a look at a couple of our extensions, as well as our retracements, 1583 is a critical point in that it was also a low that we saw back about the middle of December. In other words, when the market came up and then traded back down, you can see we've got our top right in here and these bottom areas here. The question is, will that particular area hold? You can also see that as we take a look at this market right in here, we are trading just above that, but just above that by very little. And as I said, my belief is that we're probably going to see one more wave down, and that wave will conclude the cycle. And the good news is for us gold bulls out there, that once that cycle is concluded, we will enter a genuinely new impulse phase, and that impulse phase should actually take us to new highs. Traders, we're looking at a weekly chart, straight candlestick format, again with our Fibonacci retracements. Again, I am looking at this retracement, though, from a little bit further on. This starts really at the beginning of the rally. And when we take a look at it, there's 2 key points or 2 critical areas that we really want to pay attention to. 1541, that matches this low right in here, which was 1534. And then 1582, that's a 38% retracement. And as you can see, we are currently trading just above that. So those are 2 real critical benchmarks that we are going to want to look at and see where this 4th wave might in fact conclude. Traders, we are looking at the spot market of silver currently, and as you can see, that is also off this morning, currently trading at 28.69. The critical area that we need to hold, and this is why I sent out a special stop placement suggestion the other day, is that 28.32, when we look at this particular move right here, which is from that $26 low up to our $35 high. That's a 76% retracement of that. And so that is very critical to me. Of course, when we look at this bigger picture, we're really in between and we are below the 23%. So to get any genuine information, we really need to look at a much smaller sampling of data to give us an idea of what area needs to hold. If it cannot hold this 28.32 level, I fear that it will probably make a play back for these lows right around 25.89. Call it the low 26, just above $25, just below $26 per ounce. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you throughout the week for daily updates and reviews. As I said, I will be on the road. I will be doing an interview with Bloomberg tomorrow and then on the road till the end of the year, and we will update you through email as well as videos throughout that time. Have a great day. Bye-bye.